Ashok Leyland was up almost 9% in today's trade, and that's the buzzing stock for today. And why not? In Q4FY21, the company came up with profit figures after 4 consecutive quarters of decline. And not just the bottom line figures were in positive, they were way above than what the street was expecting. In Q4 FY21, the company reported profits of 241 crores versus street expectations of 191 crores. So surely a beat on that. But not just the bottom line, on all the other parameters, there was a beat on what the street was working for. The revenues were up 82% and the company clocked in around 7,000 crores in sales this time. This was due to the strong volume performance and further supported by better operational results. Talking about EBITDA, it showed a jump of almost 3 times from what the company reported a year back, from 183 crores in Q4 FY20. This time the figure was at 534.3 crores. The gross margins did show a decline due to the commodity price inflation. There was a dip, but if we talk about the EBITDA margin, then it showed a jump of almost 280 basis points from 4.8% last year to 7.6% this time. This was due to the lower employee expense and tight cost control initiatives taken by the company, aiding the margins for them. The company recorded better realizations, and they also informed that in Q3 and Q4 they took some kind of a price hikes which actually helped the numbers for the company, and they helped them mitigate the impact of the commodity price inflation on the margins. So this was the first cut on which the stock reacted in the morning when the stock showed up a gains of around 4%. It opened with a 4% of gains, and since then we have been seeing positive and good trades building up in Ashok Leyland. After that, during the market hours, management con call happened, and the very positive commentary is coming in from that. Let me share some highlights with you. Starting with the total, how is the volume panning out and what is the market share. The company highlights that the medium and the heavy commercial vehicle share in the total volume has been improving. In Q4 FY21, that is 60% versus 50% in Q3 FY21. So that's helping them, and not only that, the MHCV truck market share has been improving for the company, not only on the YOY terms but also on the sequential basis, and it's currently at 28.9%. On the demand outlook, the management is quite positive with the kind of unlocking that's happening across the nation and the kind of government spending that's expected to kick in some time. They are hopeful of a very good demand recovery in the times ahead. They do tell us that the market shares have been growing steadily in both the segments, and the volumes have really picked up well. All the other businesses, including the aftermarket and the power solutions, have been doing exceptionally well, and going forward the company will continue to increase their market penetration across. So they are very optimistic of not only the domestic opportunities but also the exports market are looking forward. They are looking forward to that with a very good growth trajectory. They have been able to manage overhead expenses really well, and particularly in the LCV segment they foresee huge opportunities in that segment the company will surely explore that. On the investment side, they inform us that they are not looking for any major brownfield or greenfield expansions as of now, but they do have some kind of around 750 crores of capex planned for this year. But not only major acquisitions to be done by the company, but they'll surely plan some strategies if they find good acquisition opportunities. So the results beating street expectations and positive management commentary is holding the stock with 6% of gains today, and positive commentary is expected to build up some more gains in the stock going ahead.